Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Patty Cohen of Compass Realty. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. And those certificates are not sponsored by the radio station, but by Tambella Tanning Salon with 2 locations in San Francisco and 1 in Marin. Both Mark Humph and Nam Fon of Pacific Private Money are off today. Our trivia theme is miscellaneous trivia. Got a lot of good stuff to talk about. Patty, take it away. Give us an update on real estate. I know it's going crazy.
Oh, it's really, really amazing. And, on this show for probably like 9 years now, we've been talking about a lack of inventory.
Yeah.
And really, let's just say we have 40% less than we did 2 years ago. And that, I'm trying to put it in perspective, because it's like the boy that cried wolf, right?
Yeah.
And so 2 years ago, we have 40% less. Now, here's an example. Nationwide, typically at this time of year, there are 900,000 homes, properties on the market.
Okay.
Right now, there are 204,000.
Wow.
So that's what I mean. Like, you can only say so many times it's a lack of inventory, even more than before, right?
What do you think's causing? I know that usually after the Super Bowl, that's kind of typical the season. But why do you think it's so drastic? I mean, that's 1/4 of the amount.
I know.
Why do you think?
Yeah, and I mean, it's like we're taking into account, like, after the Super Bowl, like, yeah, more will come on, but for this time of year. And I'm not really sure, because a lot of times people will say, hey, I want to build or I want to add on, but housing and labor, labor and materials are so high, you would think that they would just stay put. I don't know. I mean, okay, I do kind of know.
Yeah.
Millennials are finally buying, and they're late to the party.
Yeah.
And then the baby boomers, who the middle are approximately 65 years old, they're getting off their butt and saying, it is finally time to get out of this house. And then that trend will continue, because it's a demographic trend.
That would produce more houses to go on the market if the baby boomers say it's time to leave.
Right. But now we have the millennials stepping in, and they're first time buyers.
Okay, so maybe there's more demand there than there are the sellers.
Yeah.
I mean, I'm going to take a guess at this also. I think there's a lot of uncertainty in the market with regard to interest rates, the economy, and a lot of people, when uncertainty happens, I would think that those sellers are just like pushing back and going, well, you know what, if I sell, I don't know what my next interest rate is going to be, and I don't know where I'm going to live, and I don't know how quickly I can find something if I haven't sold something first. And so they're just too scared to make a move. That's kind of my
I think you're right. And the other part of it is, and my low property taxes are going to go up. And unless I buy something for less, and I don't know if that's going to work, my taxes are going to go up. And they've been in that house 30, 40 years. So it's a little crazy, but you're right. It's like, what am I going to buy? And they don't have the stomach for it. But what they should do is get a bridge loan from Pacific Private Money and just do it in the same way. Yep. Like, your house went up so much this year. Don't worry about the interest rate. Like, give yourself a break. Don't move twice. Don't be homeless. It's crazy.
Now, what about the income taxes also? Because you can only
capital gains tax.
Gains tax. Yeah, you can only push off so much, right?
That's right. That's right. As a married couple, you can only do 500,000. I think you're right. Yeah. And so then we have millennials that are finally playing, and there are a lot of first-time buyers that are younger, and there's nothing.
Yeah, and it seems, and again, it used to be, everyone just looked at California as the mainstay, but Texas has been doing really well, and other states where, the house from 100,000 is now worth 140,000, and still 140,000 is cheap. But it's gone up 40%. I'm not saying in 1 year, but it's not like the rest of the country is backward anymore. Especially when people can work remotely.
Yeah. And like Tampa, I think was predicted when they looked at the top markets, like that was going to be the top market. And you're right, Texas was right in there too. And like typically, and like Phoenix and Vegas, those are the ones that take the big dive, and those are the ones that don't appreciate much. And they're gangbusters.
Yeah.
And then there's the people buying second homes too. And you can't find them like Tahoe and Carmel, Monterey, like you just can't find anything.
Well, interestingly enough, too, it's, California, we lost, what, 1 or 2 seats because there was more of an exodus than an influx of people, be it due to, too much liberalism in California with crime and schools and all that. And interestingly enough, though, I think it'd be very interesting to see what happens with the gubernatorial election, because and we're recording the show on Thursday, but last night their overwhelming response to remove 3 very liberal school board members, I guess you call them, trustees, whatever you call them, in San Francisco. I think finally the families woke up and said, you know what, enough of this. We don't want spending hundreds of hours of time trying to figure out what to rename Abraham Lincoln School or Lincoln School, because guess what? Lincoln wasn't a bad guy. And let's put the kids back in school, without the masks and all that. And so I think it's just very interesting to see that maybe California, I'm very hopeful, optimistic that it's going to turn the tide and we can get a little bit more on the conservative side.
I agree with you.
Okay,
it's just too much. Because you've got homelessness,
too much is too
flash
much.
and grab. Yeah.
Yeah, and I'll get into a couple of other financial things here when we get into the next topic about taxes, which I thought would be kind of interesting. But so we're going to go to our first trivia question here. Let's see here. Independence Hall, home to the Liberty Bell, is located in which U.S. state? All right, call 888-912-1190. First caller with the correct answer is going to win that tanning certificate. And so again, that's our trivia question. Independence Hall, which is home to the Liberty Bell, is located in which state? All right, stay with us. You are listening to The Best of Investing with Edward Brown and Patty Cohen. Both Mark Hanf and Nam Phan are off today. One more time, Independence Hall, home to the Liberty Bell, is located in which U.S. state? 888-912-1190. Don't touch that dial. We're going to be right back. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Patty Cohen of Compass Realty. Our first trivia question. Independence Hall, home to the Liberty Bell, is located in which U.S. state?
Is it Pennsylvania?
It is Pennsylvania.
Yeah, good.
Very good. All right. I want to make a quick mention here for PolioSF.com, which is the Polio restaurant in San Francisco, and it's voted best restaurant in San Francisco by the San Francisco locals. So you got to figure that that's got to be a good restaurant if the locals are saying it's the best. And I've been there before, and they have excellent food. They're right down in the financial district. Check them out at PolioSF.com. All right. I wanted to make a mention here about taxes.
Yes.
So a couple of things here. One, according to news sources, Americans have amassed too much in retirement. And so the government's going to be looking for ways to tax it, or like they call it, seize it, right? Yes. And it's so funny because it's like, come on, we got to get people to save. So they create IRAs, 401ks, and all that kind of stuff. And they give you an incentive. Well, they give you an incentive, then suddenly they look and go, there's too much money in there, and people aren't paying enough taxes. So now they're trying to figure out a way to tax it, right? Well, they do have what they call RMD, Retired Minimum Distribution. And it was like when you're 70 and a half, they pushed it off for a while, I think maybe to 72. And at some point, it's you have to start taking money from your IRA or 401k, or else you're going to get taxed 50%. It's a big penalty. So one of the things I think that Congress will do is lower that to age, let's say 65, right? Think about it. If they lower it to 65, and again, I haven't seen this yet, and I'm hoping that nobody from Congress is listening to the show, but I kind of get the feeling that some eggheads are going to go looking, going, where can we get money from the public? Let's make the RMD a younger age. then you're forcing them to take money out and they'll have to pay taxes. The other thing
Wow.
is, everybody, a lot of people are in love with Roth IRAs, which
Yes.
effectively you pay your taxes ahead of time. You stick money in a Roth if you qualify or if you're allowed to, and then it grows tax-free. And when you pull out the money, it's tax-free, right? So I'd be hard pressed to think that Congress would suddenly go, well, you know how we told you it was tax-free? Well, now it's not. That there might be a little bit too much of a revolution on that. So
wait, what? Oh, you mean to actually like change the terms
yeah,
of the agreement?
Yeah, I think that they'd have a hard time just saying, sticking their nose, your finger in their nose and going, yeah, we told you this, but now we're changing it. But here's one way they can get around it.
Yeah.
They can say, oh, of course your Roth is tax-free, but you're going to have to tell us how much is in your Roth and how much income you earned off of it. And even though it's tax-free, you report it. And what effectively that does is every other income that you might have will get taxed at a higher level. So they do that right now with certain tax-free municipal bonds. They're called AMT bonds. So if you're in the alternative minimum tax, sure, you may have some tax-free municipal bonds, but if you're in the AMT situation, alternative minimum tax, you're end up paying more taxes.
Wow.
So it's kind of a way that, and again, this hasn't passed yet, that hasn't even been put on the table yet. I'm just predicting that if the IRS basically wants more money, this is a way to get around it.
Yeah.
You see what I mean?
Very interesting. Yeah, I mean, there's no way, because with a Roth, you pay the taxes up front in the year that you put it away. So you can't just say, well, we're going to tax you again. That will not.
Look at Social Security, right? That for years they said, oh, you can't tax Social Security, it's supposed to be tax-free. Well, what they did was they just said, well, okay, we'll only tax 50%. And then it's, okay, well, we'll only tax 85%. And then it's, well, and then you can't pay any more tax than 85%, but you can pay a lot more other taxes because that income can push your bracket up.
That's right. Yeah.
So there's all squirrely ways these rascals. And also one last thing about this, and I'll let you take over. So if you're one of 25 million workers who had collected unemployment in 2021, you'll owe income taxes on all those benefits this tax season, unlike last year. So there are a lot of people who had gotten, quote, tax-free unemployment, and it looks like for 2021, not so tax-free anymore.
Oh.
Yeah, kind of nice. Okay, go ahead, Patty. You guys.
Well, I mean, that's a lot of money that hemorrhaged out, and I could see them wanting to tax that. That would kind of make sense a little bit,
Yeah, that part I'm not really like. I don't look at that as a big communist plot.
No.
That one I think is fair, actually, that they do that.
Yeah, I do too. Yeah, I mean, so if we talk about what's going on in the real estate residential market, people are kind of all over the place. And I'll start with a very I'll end with a macro story, but I'll give you a little quick micro story. Like, for example, I brought on a listing last week in Marin County in San Anselmo, $1,599,000. And I thought, I wasn't sure. Should I put it at 1,499 or 1,599? Well, within the first day of putting it on, a couple agents called me and said, is this going to go over 2 million? Because my people cannot do that. And I was like, no, it's not. It definitely isn't. I know the market. It will not.
How many square feet?
I don't know. What's it?
How many square feet?
1,700.
Okay,
yeah.
I was going to say 1,700. Okay.
Oh yeah, it's not 2 million. There's no way. So we set an offer date and didn't get any offers. Now that was last Friday. Okay. I fully expect that we're going to get one this week. So people are a little bit conditioned for like price low, it's going to go up. And some are conditioned that way and some aren't. So there's a lot of buyer fatigue, like really buyer fatigue. That's the prime example of it. And now I've got, another one I just brought on, and people are like, oh, I don't know, my clients, I don't know if they want to participate because they're so sick of it, they're sick of competing in the multiple offers. So there's a lot of like dancing I have to do to like discourage, but like encourage. So that's, but here's an example of how really nobody knows what's going on. And this involves Zillow, and it's out of Forbes, right?
All
You
right.
need to interrupt.
Hey, Patty, I'm sorry.
Yeah.
I just looked at the clock. Save that story. Okay.
Yes. Yes.
Make sure you remember we're
Okay.
going to come back. Okay.
Good.
Here's our next trivia question. Commercial. What chemical makes plants green? What's the chemical that makes plants green? All right. Call 888-912-1190. First caller with correct answer is going to win that tanning certificate. Again, here's the question. What chemical makes plants green? All right. Stay with us. You're listening to the Best of Investing. Don't touch that dial. We're going to be right back. Welcome back to the Best of Investing. Edward Brown here along with Patty Cohen. Our second trivia question. What chemical makes plants green?
I don't know.
Chlorophyll.
Oh, I've seen
that
that.
Yeah.
That was too easy, but hard.
Sorry about that. Okay. Patty, you're mentioning something about Zillow?
Well, yeah. Okay. So people really don't know what's going on. First of all, we're way overdue for some sort of correction.
Yeah.
If I don't even know if you can call it that. So Zillow, now this is the same Zillow that got in the game of buying and selling houses last year, and they lost money in a rising market by overpaying, and they just lost money. They hemorrhaged. Now, this is the same Zillow that has more data than arguably anyone.
Yeah.
They really do.
Crazy.
So here's what Zillow is now saying, that home prices in 2022 will spike. This is nationwide, spike 22%. Now, here's the joke here, though, because back in December, like that was so long ago, they said it was going to decelerate 11%. Okay?
Oh, you mean decline, actually?
Decline 11%. So what?
In price or in price?
Yes.
Really?
Yes.
Wow.
And
That's
so
a 37%
back in December,
change.
Zillow forecast that the 12-month rate of home growth would decelerate to 11% by the end of the year. I'm not even sure.
Okay. It's not going to decline.
No, not decline.
Gotcha.
Sorry, I was looking at that. Yeah, but still, like they're so off. And so then in January, way back in January, like a month ago, they revised their figures, saying that it would finish up at 16.4%. On Wednesday, it again shifted upwards, and it now expects that home growth to peak at 21.6% in May and to close the year out at 17%.
Okay, so they increased it 5% from December to January and increased another 5% from January to February.
Yeah. So here it is. Simply put, instead of decelerating, Zillow sees the 2022 spring housing market getting even hotter. What is the one word the one word is inventory, which is how I started out saying that, typically right now in February, nationwide, there's 900,000 homes for sale. Right now there's 204. So again, that is why I think the biggest thing that happened is people kept thinking, okay, more houses are going to come on. They're going to come on, and they're not. And I mean, I don't even understand why they would think that you would compare it to last year or the year before, because there was very little seasonality in the last 2 years because of the pandemic. But I mean, that just shows you, like, you could have all the data in the world, but if you don't have a brain like the Wizard of Oz, it's not going to work.
Well, so here's the interesting thing is, especially in California with all the regulations of how to build, the codes, the permit fees, the NIMBYism, all the regulations and all this kind of stuff. And then you combine that with the costs of materials and the supply chain and the wages, that labor and the shortage. I mean, if I'm a home builder, I don't know how I could build a home.
Yes.
I mean, you have to price it really, really high. And so that, is going to cause the other houses to go up in value too.
Exactly. And part of also, I should say, is that a lot of home builders are out of the game, because when it comes time for them to buy that lot or buy that home that they're going to tear down, they're competing with the highly emotional buyers that don't care, and they're going to overbid it and treat that property as if it was just a regular home. I mean, like a total 1,600 square foot fixer upper,
Yeah.
it might go for, 2 or 2 million, 2.2 or something.
But are the
So
millennials though, don't they kind of want plug and play, so to speak? They're not wanting to spend all that time building and getting involved with all the creativity that goes into building a house.
wait, I don't know why I should turn up my sound or something
Yeah.
because I can.
Okay, here's my point, is that it seemed like to me that a lot of the millennials, they just wanted a home that didn't need fixing up. They just wanted
Right.
plug and play, so to speak.
That's what they want.
Okay, so how many of those are millennials are okay about buying a lot and building from scratch?
They're not going to buy a lot, but if they buy like grandma's house at
Yeah.
1,600 square feet that hasn't really been updated, but it's got good bones and it's a ranch and it has a nice yard in a next door to like a $4 million house that has been redone, they'll buy that. And it's not really their preference, but they'll do it, and
Yeah.
that's why, and they'll pay for it. They're paying top dollar because that's what you have to do. So that while there is buyer fatigue, people are still doing it.
Gotcha.
Yeah.
So and then they will remodel the house. So
They'll remodel. Yeah.
okay, so they really prefer the plug and play, but if there's not that many around, then they'll go.
Yeah.
They'll have to, like again, supply and demand. What's available?
Yeah.
Gotcha.
And the builders can't really afford to do it because
No.
they're going to make it real pretty for somebody and they paid top dollar to get it.
Yeah, they got to throw some kind of a profit in there. Hey, before we go to another break, I wanted to mention one other thing here. Office attendance at financial giants like JP Morgan and Goldman Sachs and Bank of America have risen in recent weeks. So apparently, I guess a lot of these big companies are saying, hey guys, come back to work. Pandemic is close to being over. So I wonder what that's going to do for the people working from home. How many hours are people going to work nowadays? Because they've kind of gotten used to working at home and probably in one case, not putting in their 40 hours a week. In other cases, maybe they're putting in a little bit more. What's that going to do to office space?
Oh, that's a mess.
I mean, right now it's a little bit challenging, but do you think it's going to come back because employers are going to start making employees come back to work? What do you think?
Well, I mean, the same thing too. It's not as painful. Let's say you have to go half time. So the commute is not as painful. I mean, who's going to really get hurt is the office. It already is a mess. Office space and retail space if you're in commercial. But if you are a worker, a lot of them are just going, no, I really think I'm going to get another job. People are like leaving the workforce. So the employers have to adjust and they'll say, okay, you can work from home or I want you to be in half time or a third of the time. So then your commute is not as bad. Yeah.
Gotcha. Hey, tell you what, we're going to cut to our last commercial trivia question. What color is the smoke announcing the election of a new pope? 888-912-1190. First caller with the correct answer wins that tanning certificate. Stay with us. The Best of Investing will be right back. Welcome back to the Best of Investing one more time. I'm Edward Brown, your host, along with Patty Cohen of Compass Realty. Next week, probably Mark and Nom will be with us. Okay, third trivia question. What color is the smoke announcing the election of a new pope?
Yeah, I don't know.
Okay, so what color is smoke usually?
Gray.
Gray or black, right? So when finally they announce a new pope, and I don't know how they do this, is a special kind of smoke. It's white.
Oh.
So when from the Vatican, if you see white smoke coming up from the top, they're like, yay, you got a new pope.
Wow, that's so nice. The purity of it.
Yeah, that's right. Patty, you had some stats for us.
Well, yeah. I mean, I like to really give people like current information, and I sometimes will go back and like, to get a good snapshot. Let's look at the last 60 or 90 days and see how things are moving. But right now, it's not you can't really do that because the winter buyers get some deals. So I just looked at like a quick little 10-day closings, what happened, and I just took Marin County, so it's very specific. If I did like the last 60 days, which would be a mess. So we had, it's okay, on average, the properties went 6.3% over asking.
Okay.
Now, what's interesting about that is that there were a handful that went like 30 and 30% over. Yeah. And there were a handful that went 94, 97%, like 3 or 4% under. So that's interesting. And then there was a group that just went right in the middle. But still, that's interesting. Now, also, 11 days on market.
Wow.
Okay, that sounds fast, but that includes the contingency period.
Wow.
So what people have been doing, and attorneys used to say, no matter what, don't ever do that. And now everyone's really doing it. They're coming in with zero contingencies, right? So as a listing agent, we get all the inspections up front. We get the seller disclosures and the city inspection, the sewer inspection, roof inspection. We get them all up front so that the buyers really don't have liability.
Yeah.
And then as far as financing, they either come in with cash because they have the cash, or they've been to Pacific Private Money to get a bridge loan, or they're just getting regular financing, but they are taking the risk that they're going to get that loan. And it is risky because you lose your job, something blows up, and that, the stock market goes down, and that $1 million that you were coming in as a down payment is now worth 5. Who knows what? A lot of things can happen. Sure. So they come in with zero contingencies. So for an average of 11 days on market, that's pretty much zero contingencies. So that will tell you, right? So I just thought that was interesting for people to know, because a lot of times people call and say, I'm going to buy something, but I have to sell my house first. Do you think the seller will take a contingent sale on my house? No, not in a good market and not in a bad market. No. Yeah. So that's the kind of stuff. And then I also have people saying, I'm going to come in much lower than asking because I have all cash and that's worth something. No. It is worth a little bit, but a lot of times they're just going for price and there's no contingencies, and it doesn't matter if you have cash or not. Not to mention a lot of people have cash because they've gotten that bridge loan at Pacific Private Money, or they have cash.
That's it. Yeah. The only thing really with the cash is you can close very, very quickly.
Yeah.
With Pacific Private Money, with the bridge loan product that they have, because they'll still also close very, very quickly.
Yeah. So you're at the top of the highest diving board ever, and you just hold your nose and jump.
Yeah, that's it. I kind of feel for buyers because with the buyer's fatigue, and then just you can't just make an offer on just any old house just to get a house. I mean, because you realize you're going to live there, and so you really want to get a house that you want to live in.
Exactly.
Yeah.
Exactly. It's so emotional. I mean, this Forbes. The headline of this Forbes article that I talked about on Zillow says the 2002 spring housing market will absolutely crush buyers. I mean, it's like, and so you've got to keep, as a seller, just keep on going, get out there, and as a buyer, get in the game, because it's going to, yes, it's a seller's market, but 2 years from now, you bought at a buyer's market because your house is worth a lot more. So it's a good time to buy and it's a good time to sell.
Yeah, I wonder, do you think there are many sellers who, unless they're under the gun to sell, are saying, well, I'm just going to wait because the more time it takes, the longer it takes, the higher the price of my house is going to sell for.
Yeah, there is that, which is why, way back in December, Zillow made that ridiculous prediction, because people don't know what to think. So some of them, like, you're at your kitchen table and you're just kind of going, yeah, I think it's the peak, or yeah, I think we got 4 more years. But so they don't really know.
The house that you want to buy theoretically is also going up in price.
Exactly. So exactly.
You can't just jump on the, I'll just wait for my house, because every other house is going to stay the same. Only my house is going to go up in value.
Exactly. Exactly. Oh my God. Yeah. Exactly. That's why I like to educate people about what's really going on. Everybody thinks they're unique, but everybody's playing the same game.
Yeah. Now, Patty, we haven't given out your information yet because you're quite the wealth of knowledge. Would you let people know how to get a hold of you?
Oh, thank you. Yeah, I'm Patty Cohn, and I am with Compass in Marin County. Been in the business 34 years, and my email is patty, Patti.Cohn, COHN, compass.com. And my phone number is 415-722-4842. Yeah.
And let's say in the Bay Area, how big is Compass now? Because I know they swallowed up some companies. Yeah.
Dominates. First of all, Compass is #1 in the country.
Wow.
And it has the largest market share by far in the Bay Area and in most markets.
So I would think that if sellers are out there looking for an agent, that would be an extra benefit because of the networking within Compass's company, right?
Oh yeah, the network is amazing. There's a lot of trust between agents, so we make deals together. And of course, you still need to you just really want to get an agent that's been around a long time and knows how to sell houses. But yeah, it really does matter what company you're with. It does matter. And the technology on how we can market properties, it really is different and it's better.
Very good point. Again, give out your information one more time.
Yeah, I'm Patty Cohn, 415-722-4842, and it's Patty, Patti.Cohn, COHN @compass.com.
And got to say that Patty is probably the #1 agent that we know of in Marin, which is not a small market. If you think about it, I think isn't Marin County like either the #1 or #2 county for per capita per price per house or per income?
Oh yeah, we're up there. I've got some great statistics on that, but like we're definitely used to be #1, but we're like, there's 3 or 4 counties that are about the same. But yeah, and I have to brag for a minute because every year I do my statistics in January, and for 2021, I sold 14 times more properties than the average agent in the county.
Wow.
I sold them 40% faster.
Wow.
And for 13% more.
That's incredible. All right.
Yeah.
Patty, stay with us. Audience, stay with us. You're listening to The Best of Investing. We're going to be coming right back with some closing comments and our thoughts for the day, which you're going to love. There's some great thoughts for the day.
Good.
Welcome back to The Best of Investing. Last time for today, I'm Edward Brown, your host, along with Patty Cohen. No trivia question this time, but I wanted to let people know the Pacific Private Money Fund, they have a family of funds, 4 of them to be exact. And the latest one that they're trying to raise money for is called the North Star Capital Fund, which is a construction loan fund. And it's amazing how the returns just came out and they've been hitting 10%, which is quite amazing, And
it is amazing.
Yeah, there's still a big demand for, we're talking about real estate. There's still a big demand for, rehabbing property and constructing from the ground up, for all the fires that happened. I think I heard a statistic that only like half the houses that burnt down in 2017 had been rebuilt.
Really?
Yeah, there's still a lot. I can't, don't quote me on that, but I believe that was the case.
Wow.
It takes a lot to go through the procedure, go through the permit process, and even some of these counties, specifically Sonoma County, was giving a fast pass, so to speak. Especially
that's good.
On the same lot without any real changes to it. It was a lot easier to just go ahead and slide it through. So there's still a big demand, and so that's that North Star Capital. Now the minimum investment's $100,000, and it pays quarterly, and you do have to hold on to it for a year, otherwise there is an early withdrawal penalty. And you do have to be an accredited investor, so you have to have net worth exclusive of your home of at least $100,000, or if you're single, you make $200,000 a year. If you're married, $300,000 a year. But for those people who are looking to get a nice, powerful rate of return, that North Star Capital is definitely something to look at, because that's a 10% return. They're
really hard to get that.
Yeah. Oh, yeah, for sure. Their most conservative return is the Pacific Freedom Fund, which pays just a flat 6% rate of return. And that one, there's no fee to get in, no fee to get out. That one does not have a 1-year hold, and it pays monthly. But you do have to have a $250,000 minimum investment. and you still have to be an accredited investor. So for more
Mhm.
information on those funds, they have two other funds to look at. Go ahead and email investor.relations@pacificprivatemoney.com. That's investor.relations@pacificprivatemoney.com. And then, as you mentioned, Patty, for those people who want to buy a house who haven't sold their other house yet, Pacific Private Money does bridge loans, and they can do it very, very quickly. So that's a very good way to be competitive in this market, is to make what looks like an all-cash offer by using a bridge loan. Buy your house, wait to buy your next house, and then you have time to sell your other house, and you don't have to move twice. So it actually can make financial sense. All right.
That's great.
Also want to make a mention here for catchsomerelief.com. So originally this was set up for fishermen, and it's basically to make it simple, it's pain medication, but it's
Oh, really?
yeah, you don't need a prescription, and it's not CBD oil, but it's a topical type of cream, and I've actually used it myself. It doesn't get you high or anything like that, and it works. It's almost like Bengay, call it, right?
I got it.
We all know Bengay. So that's called catchsomerelief.com. Okay, are you ready for our thoughts for the day?
Yes.
Okay. Why do wood carvings take so long? And I'll have to say this in my Elmer Fudd voice. Because they have to be done whittle by whittle. Like that? I thought you'd like that. And to the thief who took my antidepressants, I hope you're happy. I thought you'd like that one too. All right, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.
Love it. Yes.